Welcome back. Today we're diving into the Zig Zag Consecutive Bars indicator by ukutaLabs, a powerful visual tool designed to help you track market pivots, confirm momentum, and time your trades more effectively. This script connects key swing highs and lows using a zigzag line, highlighting where the market is shifting direction. It also shows two key metrics at each turning point: the RSI score and the number of bars since the last pivot. Let's take a closer look at how this indicator identifies key swing points. The Zig Zag Consecutive Bar indicator works on a simple premise. It compares the closing price of the current candle to the high or low of the previous one. For example, if the market has experienced several consecutive bearish candles, placing the indicator in a bearish consecutive count, then a close above the high of the previous candle will signal the start of a new bullish consecutive count. Since the indicator is solely based on the close of the current candle relative to the previous one, a bullish consecutive count will continue even if the current candle wicks below the previous low, so long as it doesn't close below that low. The same principle applies to bearish counts. The current candle can wick above the previous candle's high, but as long as it closes below that high, the bearish consecutive count remains intact. It's also important to note that the candle's color doesn't matter. As long as the current candle doesn't close in the opposite direction of the trend, meaning it doesn't close above or below the previous candle in a way that breaks the sequence, the count remains valid. Now that we understand how the counts are formulated, let's jump over to TradingView and take a look at the indicator in action on the charts. Let's start by adding the indicator to our chart. As always, click the Indicators button from the top toolbar to open the indicator search panel. Next, type Zig Zag Consecutive Bars into the search bar. For this video, we'll be using the version created by ukutaLabs. Go ahead and click on it to add it to your chart. I'll also add the link for this indicator in the description below. Now let's quickly review the settings for this indicator. The settings for this indicator are mostly visual. You can turn off the counters and customize the color settings to your preferences. I usually just stick with the default. They work well for most setups. With that bit of business complete, let's look at the indicator in action. For this example, we'll be using the Micro E-mini NASDAQ 100 Futures, MNQ, on a 15-minute chart to illustrate how the indicator performs in real-time conditions. While the indicator does function on smaller time frames, it was specifically designed to serve as a higher time frame trend confirmation tool, offering more reliable signals when used in that context. All right, let's get started. As we can see, the market is currently consolidating during the early pre-market hours, a common phase of low volatility before the session opens. This isn't the kind of price action we're looking to trade, so for now, we'll stay patient and wait for volatility to increase and a clearer setup to form. You'll also notice that during this period there have been multiple trend changes, another clear indication that the market is in a consolidation phase. Next, we see a strong bullish engulfing candle that closes above several recent swing points, a potential sign that momentum is shifting to the upside. The market is now clearly trending upward, with the bullish consecutive count steadily increasing, confirming the strength of the current uptrend. With that strong push higher, the bullish consecutive count has now reached 13, a potential indication that the current trend may be nearing exhaustion and a reversal or pullback could be on the horizon. It's important to note that we're not suggesting strong trends will always reach a count this high. Every market behaves differently, which is why we highly recommend doing your own backtesting with this indicator to understand the tendencies of the specific commodity and time frame you're trading. Now, let's see how this trend unfolds and whether that high consecutive count leads to a pullback, consolidation, or a continuation of the move. Just as anticipated, a large bearish engulfing candle forms, ending the bullish consecutive count and initiating a new bearish consecutive count, signaling a potential shift in momentum. With the bullish consecutive count now complete, the indicator displays the RSI score for the swing high and draws a line connecting the two most recent swing points, providing a clearer visual of the trend structure. Now, let's watch how this new bearish consecutive count develops and see whether it leads to a sustained downtrend or just a short-term pullback. And just like that, right after the market open, price reversed sharply and pushed lower, confirming the bearish momentum signaled by the new consecutive count. While you can trade directly using the Zig Zag Consecutive Bar indicator, it also works great as a confirmation tool when trading on lower time frames. In our next example, we'll show you how to use this indicator to validate your entries with added confidence on a lower time frame. We strongly recommend beginning each trading day with a top-down analysis. Gaining insight into the macro bias can help you anticipate larger moves and align your trades more effectively on lower time frame charts. Starting with the monthly, weekly, and daily time frames gives you a clearer picture of where the market has been and where it might be headed. For instance, if the market has been in a strong bull run for several months and the bullish consecutive count remains unbroken, it could signal that the trend is extended and the market may be due for a pause or pullback. On the flip side, if the monthly chart is just beginning a new bullish or bearish consecutive count, that's a strong indication that a new trend may be forming, and the market could have significant momentum in that direction. As you move down through the time frames in your analysis, remember that pullbacks are a natural part of any trend, and that's often where your trading opportunities begin to reveal themselves. Now let's quickly perform a top-down analysis for the MNQ, Micro E-mini NASDAQ 100 futures, from our previous example, starting with the monthly time frame and working our way down to spot potential trade opportunities. The monthly chart shows we're in the early stages of a new bullish consecutive count, a positive sign for upward momentum. However, we're also approaching a previous swing point, which could act as resistance, so it's important to mark and monitor that level closely. Next, the weekly chart shows a sustained bullish consecutive count with no meaningful pullback, reinforcing the strength of the current trend. However, with the monthly swing high just above the current price, caution is warranted. If price is going to break through that level, the market may need to pause and absorb any selling pressure before continuing higher. On the daily chart, we continue to see predominantly bullish counts, but it's clear that sellers are active in this area. This likely reflects bulls taking profits and managing risk as price nears the monthly swing high. It could also indicate that short sellers are beginning to scale into positions, or possibly a combination of both. Now that we have a clearer macro view of the market, it's important to proceed with more caution when entering trades. This might mean reducing position size, tightening profit targets, or both, as the market could become choppy or range-bound near key resistance levels. Now that we've established the macro bias using the monthly, weekly, and daily charts, we can drop down to lower time frames, like the 4-hour and 2-hour charts, for further confirmation and to start identifying potential trade setups. Once again, we have confirmation of bullish consecutive counts on both the 4-hour and 2-hour time frames, with the 4-hour chart just beginning a new bullish count, further reinforcing our bullish bias. With our macro bias confirmed as bullish, we can now look for trading opportunities on our preferred time frame that align with that outlook, focusing on setups that support the upward momentum. Now let's revisit our earlier example on the 15-minute time frame, focusing on the bullish run the market experienced leading up to the open. We'll now shift our focus to finding trade opportunities on our preferred 3-minute time frame. We'll begin this exercise right after the market printed a strong bullish candle that broke through the previous swing points. The next 15-minute bar extended the move upward before pulling back. This is the type of price action we want to see. If the market had simply continued higher without a retracement, it wouldn't have offered a viable entry opportunity. Buyers remain active and are absorbing the selling pressure, another strong sign that price has the potential to move higher. The market seems to be consolidating following the initial breakout through the swing points, potentially setting the stage for another move higher. Given our bullish macro bias, this setup presents a potential trade opportunity. We'll place our entry just above the consolidation zone, with a stop positioned just below it, anticipating a continuation to the upside. We'll go with a reduced 1 to 1.25 risk-to-reward ratio on this trade, since we're approaching a key monthly swing level and want to account for potential choppy price action. All right, let's see how this trade plays out. Just as we anticipated, the market broke out of the consolidation zone in our favor and moved higher. And with that final push, our target is successfully reached. Understanding overall market sentiment and bias is a powerful ally in trading because it helps you align your trades with the broader direction of the market. When you trade in harmony with the prevailing sentiment, whether bullish, bearish, or neutral, you increase the probability of your setups playing out successfully. It allows you to filter out low-quality trades, stay patient during consolidation, and capitalize on momentum when it emerges. In short, knowing the market's mood gives you context, confidence, and clarity, 3 essential elements for consistent trading decisions. And that wraps up our breakdown of the Zig Zag Consecutive Bars indicator by ukutaLabs. Whether you're identifying pivots, measuring momentum, or refining your entries, this tool brings clarity to market structure in a way few indicators can. Thanks so much for watching. If you found this tutorial helpful, please drop a like. It really helps the channel grow. Got questions or want to see this in action on a live chart? Leave a comment below. And if you're serious about sharpening your edge, don't forget to subscribe. We've got more trading tutorials, breakdowns, and strategy videos coming your way. Trade smart, stay patient, and as always, keep learning. See you in the next one.